Good afternoon or good morning, everyone. Thank you very much for joining us today at our Green FinTech Trends and Opportunities webinar. My name is Christiaen. I am the Head of Innovation Impact at the UK Centre for Greening Finance and Investment. And I'm joined today by an excellent selection of panelists from across the, let's say, Green FinTech space to kind of really shed a light on, I guess, some of the, solutions that are out there or trends that we're seeing that can help address or that can talk to some of the policy developments that we've seen over the last couple of months around sustainability overall. So we've got basically a kind of two-series webinar planned. Today we'll talk about the policy environment and the policy trends, and hear some thoughts on experts in the field that were actually on the ground at COP16 in Cali, COP29 in Baku, and hear from a few leading fintechs on how they're seeing the markets evolve. And then we've got a second webinar that I will invite you to sign up to as well next week. They will dive a bit deeper into kind of additional solutions, particularly around nature tech, nature fintech, with some views from financial institution users and VCs on how the market is developing. Before we kick off, I'll give a quick introduction to the three organizations that are organizing this webinar series. So it's ourselves, Nature Tech Collective, and Innovate UK Business Connect. I'll quickly frame some of the discussions of today before handing over to our experts for their introductory remarks and opening the discussions. If you have any questions throughout, please pop them in the Q&A. We will pick them up towards the end of the webinar. The only other thing, I guess, to mention is that the webinar is recorded, and we will share the recording with attendees and registries afterwards as well. So quickly, a bit of background about ourselves. So we are the UK Centre for Greening Finance and Investment. We are a consortium of universities in the UK funded through the Natural Environment Research Councils. We were set up to help financial institutions and the financial system make better use of climate science and climate and environmental data sets. So we kind of came out of the UK's Green Finance Strategy in 2019 and have the mandate to try and bring together the academic side, the climate and environmental community on the one hand, with financial institutions, regulators on the other side, to drive the green finance agenda, particularly on the greening finance side and integrating nature and environmental or climate and environmental analytics or issues into mainstream financial decision making. So we're a collaboration between multiple universities, University of Oxford, Bristol, Reading, Imperial, Leeds, and STFC in Harwell, and we do a range of things. We work with policymakers on frameworks, standards, and engagement. So we've done a lot of work on transition plans, for instance. We've also done work with the Climate Financial Risk Forum in the UK on stress testing. We have colleagues working on applied data analytics research, so how to connect different climate and environmental data sets, open data sets, into specific financial sector use cases, both on the physical climate risk side and transition risk side. And we also try and support the kind of innovation and ecosystem, an innovation ecosystem to kind of really help grow that space of intermediaries that we really need to operationalize a lot of these data sets and science and analytics that tend to sit quite a bit in academia, non-profit spaces, or in public institutions, but really struggle to find their way into financial sector decision making. And there's one thing doing this from a kind of academic perspective and doing academic research, but we are really not very good at operationalizing this stuff. And this is where we need innovators and companies, both new ones as well as established ones, to operationalize this stuff. And this is where our work on green fintech really sits. A few months ago, we launched a report on our view of the kind of green fintech landscape, particularly in the UK. We looked at some of the key trends and drivers that are pushing green fintech solutions. We've looked at the different types of solutions that are out there, from sustainability reporting and advisory services to carbon accounting solutions to nature risk management, insurtech and whatnot, and try to paint a picture about which are the kind of the companies in the UK, which type of solutions have grown a lot over the last 4 or 5 years, and where is the market going, with the idea, with the hope that we can stimulate and and raise awareness and raise the profile of some of these solutions within financial institutions themselves as well. And so we're really excited to have a few of those here today and actually expand on that work to outside the UK, which is where the Nature Tech Collective come in and Innovate UK Business Connect. So our two other webinar partners, who you'll hear more about both today and tomorrow, have equally been doing a lot of work in this space. So Innovate UK Business Connect have done a lot of work on connecting the geospatial tech, the geospatial data ecosystem, particularly in the UK, with different markets, and financial services as a market is something new. They've done, or they ran an Ignite Innovation Lab connecting the space sector with financial institutions to address nature and biodiversity related questions, particularly in the UK. But this is a much bigger market and a much bigger opportunity space, which is why we're really excited to partner with the Nature Tech Collective, who've been shining a light and promoting the work of great companies around the world. And Gilad will tell you a bit more about their work in a second. But this gives you a picture of kind of the three organizations organizing this today, and why we're trying to shine a light on some of the exciting developments we're seeing, at least on the supply side. And what we want to talk a bit about today is more on the demand side, and how let's say recent developments in policy or shifts in policy or maybe attitudes in policy and business are driving that narrative and the trend for the green fintech sector today. I think when we released our green fintech report, I think it was around the summer, just before the summer, which we'd obviously been writing a few months before, we had quite a different policy landscape, a different level of enthusiasm or ambition on certain sustainability topics. So it's interesting to see, or at least hear in the news, how things and perception can change quite rapidly. But is this also translating into private sector action? Is this is this something that we're seeing really impact the demand and the users of these green fintech solutions? So what we really want to talk about today is some of these developments and what this means for green fintech. And then in the next webinar in a week's time, we'll delve even deeper on the nature side and the solution space. But without further ado, I'm very excited to introduce to you a range of super expert and very knowledgeable panelists. And we'll start off with some reflections from two COP veterans, I'm going to call it. I know Mike is a COP veteran. I don't know, Gilad, if I would insult you by calling you a COP veteran. I know Mike really is one. But Mike and Gilad, they both have had boots on the ground, if you like, in Cali and in Baku. So I want to start off by hearing from you guys about what really are the key outcomes, or the lack of outcomes in a way, that we've seen from the COP processes. How have you seen I guess the private sector interact with this as well, and your reflections on what it means for kind of green fintech going forward. And we'll start with Gilad, so Executive Director of Nature Tech Collective, also a serial social entrepreneur. I'm very excited to have you here with us today, Gilad, and I'd like to welcome you to the virtual floor for your thoughts on this topic.
All right, Christophe, thank you for the warm introduction, and thank you for everyone for showing up. It's like December, people, you should be clocking out, thinking about skiing or whatnot, and you guys are here, so I'm very proud of you. So I'm definitely not a veteran of COPs. Recently had a conversation with someone who said he was there at COP 2. This was my first COP. Well, yeah, it seems like it was a tale of two cities in a way. To your question, you mentioned lack of decisions. We know that that the same kind of unsatisfactory result happened in both COPs and the recent plastic talks. And you can't help but set those against a backdrop of a wave of more adversarial, maybe anti-climate elections and political moves all over the world. Oddly enough, from our perspective, while we see a possible ebb in the momentum of support for climate and climate tech, we're actually going to put out a spicy take in an editorial very soon, and we're calling it, "Is Now the Time for Nature to Overtake Climate?" We believe, though, there's a unique, first of its kind opportunity, perhaps, to drive support across both sides of the political spectrum for nature. To be clear, we're not anti-climate. or climate tech, of course, but rather we see climate, which in most contexts means carbon and GHGs, as an important facet of the far larger view, which is overall planetary health. And at Nature Tech Collective, we exist to support those solutions who serve the nature positive transition. We're at your service, in other words. We're a nonprofit membership organization, and we first and foremost provide a platform for collaboration in a very pre-competitive way for those who otherwise may be competitors or stakeholders that don't usually talk to one another to actually talk to one another, to pattern match, and to work on sector-wide challenges. And obviously, we also do our best to get them on stages, to amplify their message. We also put out a lot of research, like as Christophe mentioned, in order to really push the private and public sector from the awareness stage to the action stage as soon as possible. Because we believe nature tech will be, no smaller than AI and crypto in terms of industry strength. It's just that AI and crypto don't really have this ticking time bomb of biodiversity and nature loss right next to it. And so that's why we exist, is to really accelerate the path of adoption. Okay, so going back to your original question. Yeah, politics, it's an area where we didn't see as much action as we would have liked. However, on the private sector side of things, at events like Bloom, the World Biodiversity Forum, at private workshops that we held with our colleagues, we saw in point of fact that nature tech was no longer an unknown quantity. No one was looking for the awareness side of things or into the education. They want to know how we could use nature tech, how they could use nature tech for their specific bottom line issues. And this actually, again, speaks to the strength of nature and nature tech, and that is much easier to connect nature with the bottom lines of almost every single company by first degree or second degree. And so it's not something as ambiguous. It really speaks to their own resilience, and that is a much easier sell. And so we're very bullish on the future of nature tech, even as the political winds go the way they do.
Brilliant. That's great to hear that you're very positive on where it's going. I guess a quick question on the private sector side. So you're seeing it's very much driven by the bottom line of companies realizing this. So are you seeing this across industries? Are there certain private sector industries that have a more direct bottom line impact that are earlier adopters of this tech than others? I know sometimes, at least some of the discussions we have on at least with financial institutions, the kind of the financial materiality always is a question that comes back, and is not, at least in some, not fully well understood from a bank or an asset manager or a pension fund perspective. But you're seeing that differently.
Yeah. So in a way, the banks and the financial institutions have it the hardest because there's so many degrees away from the actual the land, the soil, the water. And so for them, there's it in a way at the service, or at the they're kind of stuck at the service of the actual companies that they're either lending to, trying to get information from. Some are much lazier than others, I would say. Some are saying we just get what they give it to us, and then we kind of write a report about it. Some are looking to actually use nature tech as a direct audit, and it gets really interesting. My sort of moment of realization around corporate action and interest is when you go to the quote unquote main offenders. The extractors, the companies, the organization you usually think about when you're thinking about nature destruction, and then you find out that they are often the earliest users of nature tech. Like, they'd be the first client for Nature Metrics and other players because they know the land better. They're either owners of the land, and given, or that they're, because they're extractors, they know that they're dependent on it. So sectors that are very active in nature tech are mining, companies in food and ag. The ones that, if you go to the TNFD's website and you'll look at the top kind of like the sector, what do they call them? Sector guidance, it's probably those companies that are the first adopters in major tech. It's probably those companies that know the most. And often you'd have a massive delta between what a company has in store in terms of knowledge and what it's sharing with the banks. And it's not always because they're trying to, it's usually actually because they're not because they're trying to hide something. It's because the banks aren't asking. And then I think changes very soon as CSRD and all these things come up. But that's something, Christophe, you could speak to much more. But that was an interesting point of realization where I actually spoke with someone who works high up at a bank, and this person, their job beforehand was working high up at one of the big companies in the, call it the food and ag space. And she's like, in my present role, I'm not actually supposed to ask, or I'm not asked to ask the questions that I know this company that I just worked for has the information. They literally have reams of details, and they're not sharing it because they're not being asked to. So that was really interesting for me to hear.
That is very, yeah, I think the dynamic between these players is very interesting. And I know there's an awful lot of researchers that would also love to get their hands on more detailed corporate biodiversity data, but that's a whole separate webinar in itself. Mike, over to you. I hope I can call you a veteran of COPs. I say it in the kindest possible way. But I would love to hear some of your thoughts of the COP in Baku. So Mike is the director of the Center for Climate Finance and Investment at Imperial College Business School, previously many years at S&P Global, and always at COP from what I recall.
Thank you.
Over to you, Mike.
Thank you, Christophe. Yeah, and I would consider myself to be a veteran of COP. Can you see my slide okay?
Yes, perfect.
Yeah, great, excellent. So I'm just going to give you a bit of a high-level overview, a post-mortem, I suppose, of COP29 in Baku. I was there for a few days during the first week, and you can see here from the selfie that I was there, so I'm not making this up. I've been to various COPs over the years, ranging from COP15 in Copenhagen right through to COP29 in Baku. And I mentioned Copenhagen deliberately because at Copenhagen back in 2009, that's when the first climate goal was established, and that was the key priority for COP in Baku, basically to revamp and renew and ramp up the climate finance goal. And by goal, I'm talking about the country-to-country transfer of finance to help developing countries adapt and also deal with mitigation related to climate change. So both the causes and the impacts of climate change. So that was the key priority. That's why it was called the Finance COP. So coming up with this new collective quantified goal on finance, NCQG was number one priority. Number two, equally important, and to most people actually more important, was enhancing national climate ambitions. And by that, we're talking about ramping up the emission reduction targets through the what's so-called NDCs, nationally determined contributions. And the third one was basically making sure that loss and damage was operationalized properly and flowing, funds were flowing. The fourth one here, Article 6, relates to the carbon markets, and probably the only one where real progress was made. And the final one was adaptation, which was fell woefully short of making any progress. So let's touch mainly upon the first one, climate finance. The new quantified goal was actually agreed. So if you want me to summarize, this is a question of sort of progress being made, but only on a limited basis, because the ask was for somewhere in the $1 to $1.3 trillion per year in terms of country to country flows from developed to developing, and only 300 billion was agreed. And that was from the perspective of developed countries taking the lead of raising 300 billion. And that is also from a variety of sources, including multilateral banks, which include contributions from countries like India. So there was a lot of, I suppose, disappointment with that, because it felt that wasn't a true achievement, not only in the quantity being too low, but also in terms of the sources of finance. But saying that, so going back to Copenhagen, Copenhagen agreed 100 billion back in 2009. This has now been tripled to 300 billion. And so, that in itself is progress. And also the fact that, if you look at the data that was released by the independent high-level expert group, so that was a group led by Nick Stern from the LSE, that was a real representation of a uplift in the amount of finance being provided by developed countries and the multilateral institutions. So progress of sorts, but nowhere near as much as was hoped for. And that's really the issue here. The expectation was very high, and that expectation wasn't met at all. So that's the background to the finance. Saying that, if I can move on to the matter in hand, which is basically related to green fintech, if I move forward to this slide deck to the relative part here. And by the way, if you're interested in more information about what happened at COP, this slide deck can be circulated to all participants, but I haven't got time to go through it all now. What I want to focus on is really about what the practitioner community can do to support the COP29 agenda from the perspective of research. And really this falls down into three key areas. One is data, the second one is technology, and the third one is finance. And those three are interconnected. So a lot of the work that's going on in green fintechs at the moment and climate innovation as a whole is around data sharing collaboration. So more of that needs to be done to basically facilitate progress in terms of tackling both the causes and the impacts of climate change. So sorry, I have to move to get the lights going again in this room. It's one of these very sustainable rooms where the lights switch off if you don't move around. So secondly, technology. It goes without saying that there needs to be more work done with sharing knowledge between climate tech entrepreneurs, professionals, with governments. And that's basically what was called for at COP. So COP has various bodies discussing this topic, and they all came to agreement that this is basically something that needs to be tackled, but technology advancement together with data sharing and collaboration. And then the third plank is really climate finance. So new ways of mobilizing finance through new structures, new tools. The buzzword is blended or blended finance, and that really is looks at structuring sort of capital from multilateral institutions and highly rated institutions to help de-risk investments. And there's now a lot more talk about including the insurance industry in trying to leverage climate finance and de-risk climate finance to ensure that it can be scaled up. So there's a lot of innovation that can be done in those areas. So moving on to opportunities side. So here are some summary opportunities from an innovative solution perspective. And some of these I know we're going to be talking about, so I don't need to go into too much detail. So transparent investments, basically looking at establishing platforms, looking at crowdfunding solutions, especially in the renewable energy space. So there's a lot of need for transparency and data sharing, and also platforms to make sure that this information gets disseminated. Blockchain and decentralized finance is an important part of this, especially when looking at supply chain solutions. And this can help bring confidence to the markets by reducing greenwashing risks, which seems to be a key blocker at the moment. On the loss and damage side, this is basically transferring money from developed to developing countries to help cope with the damage caused by climate change already. So tools and technologies already being used to try and mobilize that capital, but also transfer it, and also the implementation of solutions using geospatial and AI-powered analytics. So this is real. This is happening right now. So countries like Scotland, for example, are transferring money to Malawi, and I know this. I heard it on a podcast recently that this money is actually now being transferred from the Loss and Damage Fund. So these are real opportunities to get involved in what's happening. And then finally, the big one, renewable energy finance and scaling up. So I mentioned platforms already, but tokenized assets and the use of the carbon markets, which got a big boost through the acknowledgement and full implementation of Article 6. Now those projects are starting to flow through the different types of solutions and the different types of project methodologies are now being submitted for approval. So this provides a real opportunity for new financing solutions to bring these projects to market. So whether it's through large public-private partnerships for large-scale projects, or whether it's more bespoke niche areas, I think there's an ample opportunity there for fintech to actually help out and help mobilize capital for renewable energy finance. And I'll pause there. Thanks, Christophe.
Thanks so much, Mike. That was excellent and very comprehensive and really interesting list of potential solutions that you see. I obviously have a few questions, but I first want to pass the floor, or hand the floor, or give the floor, or the virtual floor to Josh, because I know, Josh, you need to run or need to leave us a bit earlier, and I don't think I'm going to stop calling people veterans of COP, but I know you've been following COP for a while as well, and we met there a few years ago. So if you're happy to share your remarks, firstly about what you do at Sust Global. So Josh is the CEO and co-founder of Sust Global, and then I know you have a lot of reflections and I guess ideas around how our ecosystems could or should interact better to support this agenda. So very keen to hear from you, Josh, and then I'll maybe ask a question to you and Mike together.
Yeah, thanks, Christophe. And you said to me in the email that unfortunately, because I can't be here for the Q&A, I have to get all of my opinions out in a short amount of time. So
go for it.
You know me. I will do my best. I mean, and I would love to just show you guys a couple of visual examples of maybe solutions to some of these questions I posed. But I'm ruling myself out of becoming a COP veteran. Truthfully, I've stopped going. Partly that's because of my place in the value chain. I'm a startup founder working with private sector companies. It's a lot of policy-driven things. I was at New York Climate Week in September, and it is true, right? A lot of the people there, they say policy is the real driver of all of these things and all of these changes. It has to come from policy, but policy is slow and policy is painful. And at a startup, when you kind of have a JIRA board that says not what do you want to get this year, not what you want to get done this month, but what you want to get done like in the next day, these timescales are pretty painful to watch. And I think also there is a real range in the private sector where I see kind of the biggest opportunities, especially with the changes in the US at the moment, to drive outcomes. But those outcomes are often very diverse. I think the problem is when I see COP and we see the loss and adaptation fund, which is super important, and the nature-based steps forward, and I think it was like Article 6.2 and 6.4, massive leaps forward. But you got to get bums on seats by preaching to the wider choir. We don't just want to have all of the climate folks that turn up to every COP. Like I think being a COP veteran should be a collective failure of all of us, right? We kind of want to get people out of COP and into the boardrooms and into the businesses and into the places where we can really dig into changing the way that things work. So that's not to say that COP isn't important, but I just think that really the thing that wakes me up and gets me going every day right now is to work with as many of our customers as possible on as many different problems as possible. Maybe I'll just do a really quick kind of share on my screen on some of the things that we've been doing, because I do think you can. Christophe, tell me if you can't see my screen. That would be better, and I'll just keep going. Because I think the thing that we've seen is the policy is really important, but when you get to customers, they want lots of different things. If you ask somebody what they want, they tend to give you their shopping list. If you really drill down, you tend to understand kind of what's on their Christmas list, like what are the actual, hey, we would really like this subset of things. But the more you drill down, the more you see that this is a non-standardized set of solutions. So with the CGFI and with spatial finance being a key kind of driver here, I wanted to just touch on some of the geospatial AI things that we've been doing, where really a couple of views, I guess, one on the damage and the loss side in the spirit of COP, and the other in the carbon market side in terms of some of the things we've been doing there. And I think fundamentally, the point I'm going to make is that you need to turn all of this data into a set of quantifiable and transparent scoring and metrics that regular people understand. But we also need to stand it up in modalities that they also understand. So, you know, it can be pretty much the standard of looking at assets on a map, looking across supply chains, looking across companies, understanding where things are and what are the risks across different climate scenarios. Pretty straightforward and important tool. I'm sure lots of you have experimented with a variety of tools there that do these types of things. But what about if you want to look at the risks across a forest, for example? If you're looking at a nature-based carbon solution, you know, where is a forestry project most at risk? What about the carbon sequestration from wildfires, the losses from wildfires? What about from pest and disease or water availability? You need to be able to have these spatial tools to zoom in and zoom out, go from a point-based assessment to a polygon-based assessment. And all of these things can be done kind of in the super app on our side, depending on what the customer wants. And then grouping up to like admin boundary or regional analysis, where you need to go from not just, hey, what's happening at my factory or my location, but how does that compare to my neighbors or the surrounding county or different types of data sets that maybe the customers have. So it's a case of really to meet the customers where they're at and to go from COP to really driving these outcomes. I think simply it's drilling down all of these nice, pretty geospatial views, and spatial finance is super important, but to the one killer app, which is of course an Excel spreadsheet, turning all of this complex and interesting data into really boring things that solve problems for customers and financial institutions and investors and, you know, folks who are doing things in their day-to-day, often not in these shiny geospatial tools. Nobody really wants another dashboard, ironically, after showing you all of these different dashboards. So I just wanted to wrap my thoughts on it, which is policy is super important, but getting climate into spreadsheets is probably the most important thing. We can do that in a variety of different ways, through a visual risk analytics platform, through regulatory platform, through bespoke indices, through CSVs, through APIs, through third parties. Really, it doesn't matter. None of these things matter. It's how do you get the data into the hands of customers and help them drive their workflows. As Christophe said, I do need to dash in a couple of minutes. Please do just connect with me on LinkedIn, drop me an email. This is just a snapshot into what we're doing every day. Overall, I'm very hopeful of COPs moving things forward, but I guess I would just encourage everybody here to understand, like, what is our each of our unique role to play in this ecosystem. And I recognize that certainly for me, it's not you know, getting on a plane and drinking a load of coffee and having some snacks at COPs. You know, I'm kind of useless there. I want to be building products and serving the customers. So there we go. Those are all of my inflammatory opinions, Christophe, in 5 or 10 minutes.
How inflammatory. Thanks so much, Josh, for an interesting take as always. I guess before you go, you say indeed, you know, everyone says policy is a big important driver. The private sector is where there is, in a way, more speed and agency in all of these issues. How much, I guess, do you see private sector demand or interest? How much is that correlated to, I guess, the policy sentiment or the policy kind of developments to some degree? Like, or is it kind of that train has left the station? Like, private sector know they need to take this climate risk on board. They know they need to work on this. No matter kind of, you know, the opinion changing, they will go for it, and they're gradually getting more sophisticated. Or are you seeing fluctuations in private sector demand for your services as well? Interesting to know.
Yeah, I think people are getting super sophisticated, to be honest. If you rewind, you know, we were founded in 2020. Every reporting is a great driver, right? After me dunking on policy, saying, oh, all these things, regulation really is the thing that gets a lot of these non-climate folks in the door. You know, doing the TCFD reports, which are now IFRS reports, or, you know, the alphabet soup. Once they've done a couple of those, though, they really then want to drill down into, well, so what? What does this mean? You know, we're working with a couple of $100 billion plus AUM firms today, and they start with regulatory, they start with reporting, they start with, hey, can we show our C-suite this stuff? And then they go, holy shit, a lot of wild climate events happened in the past 12, 24 months that we can't explain. Forests have been catching fire when they shouldn't. Even the cyclone Helene, right, which hit Asheville, which is a climate haven, right? I was there last month, and it's pretty brutal. Like, all of these things are happening. So I think these companies are now saying, well, what does this mean for our actual business operations? Even like, I don't know, renewable investors. What happens when wind speeds go up or slow down? That has a pretty significant impact on IRR. What about if, like I said, carbon sequestration drops because a forest gets burned down because people are planting a load of non-indigenous trees that are just little saplings and get absolutely ripped through when these kind of fires turn up when they shouldn't? What about cyclone impacts on mangroves? So it kind of very quickly goes from the box ticking, like come for the regulations, stay for the insights, I guess is the 3-word summary, or how many words that is.
Okay, well, that's encouraging to hear that the regulation people complain about of having to do too much reporting does actually drive eventually some changes in decision making internally as well. So thanks so much, Josh, and I appreciate if you need to dial off. And I'm looking forward to catching up with you over an inflammatory coffee in London at some point, maybe, so we don't have to meet at COP anymore. So I'd like to, I guess, move on and invite Megan to the virtual floor. Megan Pillsbury is the founder and CEO of Dunya Analytics, but previously also worked at Goldman Sachs, Morgan Stanley, and the Climate Service. So really encompassing quite a part of the value chain, if you like. And Megan, great to hear from you first about Dunya Analytics, and then secondly, how you're seeing the market or demand for your services, I guess, evolve, mature. Do these COPs have an impact on this at all or not? How is the relation between policy and private? And similarly to Josh, maybe, are you seeing, I guess reporting for nature is maybe a bit more nascent, but are you seeing the same trends, or is it quite different? Very keen to hear your thoughts.
Thank you, Christophe, and thanks for having me, and hello, everybody. To be speaking with you all today. So my name is Megan Pillsbury. I'm the founder and CEO of Dunya Analytics, and we are a SaaS platform that basically makes it easy for companies to measure financial risks associated with nature loss. I'll get to that in a second. I did just want to Josh's comment about regulation being the driver. So as you mentioned previously, I was at the Climate Service. We did climate risk analytics, and regulation was the driver there. And as soon as users saw climate risk and then saw, like, connect the dots with what was happening in real life, it became a thing that they cared about, and it became less about meeting the ESG disclosure requirements, which they still have to do, but more about good governance and risk management within the business. So we're seeing a similar kind of trend following in the nature risk side of things as well. CSRD is the biggest driver of nature risk analytics, measurement, and reporting that we are seeing globally. And the way that the regulation is written, it snags a lot of companies that are based in the US, based in Asia. So in order for them to comply for reporting in 2026 for data in 2025, they are already starting to look into nature risk analytics. And we have a handful of customers and have spoken to dozens of companies, and they all kind of see this playing out similarly to climate played out. Nature is trickier, though, to Gilad's point. Climate is just a portion of nature, and nature encompasses all these other things too, like water, waste, pollution emissions, ecosystem services use, etc. And that is very intimidating from a management perspective. It's also intimidating from a finance perspective. So I've heard from people in financial services, ESG experts in financial services say, when are we going to get the nature GHG equivalent, right? Why can't we just boil it down to that? And it's like, well, you don't use just revenue to assess a company's financials. you use a lot of different metrics around financials to understand what's happening inside of an organization. So investors and banks need to start getting fluent in the different metrics of nature, and we will converge on a set of metrics that will be like GHG equivalent, but it won't be one, it will be several. So we can expect to see that coming together over the next couple of years. What we do, so I mentioned we're a SaaS platform. We are there for companies at the beginning of this nature risk analytics journey. Maybe they picked up the TNFD and been overwhelmed by it, maybe not. But we kind of simplify that data collection and aggregation into our platform. So companies say, this is what I do and where I'm in it. And we bring all the data that they need to understand what that means for the ecosystems where they're operating. And we do the data interpretation as well. So when you give like a mean species abundance metric to a company, what do they do with a mean species abundance metric of like 0.62? Like, what does that mean for the business? So it's that translation layer that we are automating. So every company of every size can start down this journey. And the reason it's important, especially if you're coming at it from an investment asset management perspective, is like there's a lot of solutions out there and a lot of kind of traceability initiatives to find the locations of where these impacts and dependencies are, but really only the companies know. And sometimes even the companies, like, they maybe know where they're operating, they maybe know who their suppliers are, but they don't see the full transparency of their supply chain. They really need every company to at least disclose their risk, if not disclose their locations, because many companies consider their locations to be confidential, right? I don't think, like, if you're financial services and you're like, where's the location data? I don't think you're going to find the location data, right? I think you can do some top-down assessments to understand kind of the big risk themes and where you should focus. They keep out finance programs. But when it comes to really understanding company by company what their nature risk profile is like, you need companies doing a bottom-up analysis based on their locations, because nature is local. So it has to be based on the locations. And they need to roll that up into reporting and disclosures, both on the impacts and dependencies risks. So our platform makes it easy and available for companies to do that. Then they can roll into, like, here are the priorities. Let's focus on nature strategy and start disclosing nature strategy, setting targets and things like that. The companies that we're working with, I mentioned, they're responding to one of two things, either CSRD or investor questions. So initiatives like Nature Action 100 are driving companies to start saying, well, we need to have our nature story. We need to start putting this together because it's coming. And then there is a third category. There are some kind of sustainability leaders that are working with it saw their climate differentiation as a way to stand out as a sustainability leader. They're like, that space is becoming crowded. It's table stakes. Everyone's doing climate now. How do we become a leader in nature in order to maintain our leadership status? And so they're looking at how we set aggressive nature-based targets, science-based targets for nature. How do we kind of stay out in the lead? So you have this spectrum of organizations. The other thing that I will share, which is kind of interesting, some of these top-down analyses on the double materiality assessment. So kind of the first step in the CSRD compliance guidance is do a double materiality assessment. And I'm seeing a lot of companies doing these surveys, like survey-based assessments internally, where they're asking employees who've never had biodiversity and nature in the scope of their role if biodiversity is important. And lo and behold, they're finding that biodiversity is not material. And these are companies that are in mining, agriculture. Like, the sustainability leaders in those companies do not believe those results. So as an investor looking from the outside in, if you have a company saying, oh, we found biodiversity is not material, but it's a mining company or agriculture company, like, question their methods. Because what we really need companies to do is to get into measuring from the bottom up with the specific locations. Again, obviously I'm going to champion that. That's what we do. because we see that as an important piece of accelerating the transition, we are building the tools to make that really easy and scalable so every company. And we'll pause there. Thanks.
Thanks so much, Megan. I think that's fascinating. Read that last bit on internal surveys about nature materiality from your employees. I've never even heard of this. This sounds terrifying to some degree. I guess a quick question. You touched on a lot of points, including like, we're going to need a basket of metrics. We're going to need, or you're doing a lot of interpretation and translation of the numbers and the science. And there's a need to question the methods from investors towards, companies reporting, etc. So I think the capacity piece is really important, obviously also for us as financial institutions, as academic institutions to try and help in advance. Are you seeing how are you seeing at the moment capacity within your clients, either corporates or financial institutions, in being able to absorb nature data, more complex nature data? Because I imagine that is a challenge still in many places. Are you seeing that as well? Is that evolving rapidly? How do you deal with that?
Yeah, that's a great question. I think it would be a tragedy, and I'm seeing this happen at really big companies who have large sustainability teams. They're hiring PhDs out of the field into their companies to basically do data lookups and data assessment and data interpretation. There's not enough biodiversity PhDs to do that, and we want them in the field doing the research in the environment so we understand. So we do need the tools to help companies do the data interpretation. The guidance, unfortunately, just kind of points people at the data. Here's the data, and then you need to go figure it out. So that would require companies to then have that expertise. I think, like, between our solutions, between other solutions that are more sector focused in the market, we will start to see tools come out where just a sustainability leader, somebody who came from the climate side and is now working on nature side, can move into that space. And I have seen many companies, like, again, the really, really big ones are hiring PhDs, but that next tier of multi-dollar companies that don't have massive sustainability teams, they're upskilling people in their organization, or ESG managers and directors are upskilling themselves. So I mentioned, the findings of biodiversity not being material. Those people don't believe that story, and they know that in a year or two, we're going to have to turn around and do a deeper assessment. So they're already educating themselves, and it's a journey, right? So for any company, I would ask if they're thinking of how to upskill your organization to do this. One, reach out to us as a starting point, but two, pick somebody in your organization who's kind of familiar with ESG landscape or familiar with the climate landscape, and just tap them with going to study this stuff, because you don't need really deep science expertise to start to understand and connect the dots. When it comes to selecting the right data sets to answer the right questions, yes, you need to have some expertise. But again, you can call on consultants, you can call on us. That's what we do in an automated way. There are ways to handle that you don't need to hire PhDs out in order to start with this problem. So the capacity building piece, I've seen it even at really large companies with big impacts. There's just a self-appointed person who's like, I started looking into nature, I became kind of the de facto head of nature. We're planning this, and I'm just going down the learning journey that unfolds. It's still early days. So if you get started now, you're already like at the cutting edge.
Brilliant. Thank you so much, Megan. So finally, I'd like to invite Sarah Clow to the virtual stage. Sarah Clow leads partnerships and strategy at Stratifyx. Is also a serial entrepreneur. And I would love to hear your view, Sarah. I guess, obviously, what you're doing, how you're seeing the market evolve, but you guys seem to have a solution that really touches on some of these, these markets that are being created, or the discussions at COP that are enabling these markets to exist and to grow and scale. So there, I think, is a really interesting kind of direct connection or nexus between that policy space that allows the markets that your solution can help with. So I'd love to hear your thoughts and perspectives on how this is going and how you're supporting the different participants in that journey.
Awesome. Thank you, Christophe. And I'm really, really happy to be here with all of you and always take away and learn more from these conversations than I feel like I contribute, but we'll do our best. So, I cannot echo loudly enough both what Josh and Megan said. And with limited time, I will just kind of dive in a little bit to what Stratifyx does. And then we can kind of go to Q&A, but we're really on the solution side. Like you said, Chris, we'll do our best. We're trying to provide, a platform that combines geospatial data with domain knowledge in order to bring landscape scale solutions to businesses that are interested in using those solutions, whether or not it's a regulated target and or a corporate goal, similar to what Josh said. We do see a lot of what we would previously call bad actors or extractors in the space that are coming to Stratifyx in order to look at large scale, landscape scale projects that they can use to mitigate some of their, historical development, let's call it. We look at this value chain that the World Economic Forum put out very seriously and aim to provide solutions at each point in the value chain. I will say, really germane to this conversation is, as we continue to develop the platform, we are much more involved in this third step of capital allocation than we originally had thought. So we are working very closely with our clients to de-risk a lot of the investment that whether it's a project developer and or bank or private company are coming in to look at investing in these landscape scale solutions. And so really seeing this consulting on, de-risking and participating in the diligence in order for these companies to help meet their goals has become really a key part of our offerings. So Stratifyx, sorry, just to back up, we are a geospatial technology platform and consulting, and we are focused on bringing data intelligence and ecological domain knowledge efficiently to accelerate the nature positive transition. This is, you'll see, and you all are very familiar, that analyzing landscapes for natural capital opportunities has historically been very lengthy and very costly. And so while we are a geospatial platform, we really GIS analysts are best drivers of the platform, but you folks do not need GIS experience in order to drive the platform and really gain valuable insights. We pride ourselves on scientifically rigorous science in order to deter some of those greenwashing applications that people may be using otherwise. And then it's really the market intelligence about how we can bring these landscape scale projects, whether that be in ag, mining restoration, just Pocosin or peatland restoration, etc. Bringing all of that into one platform, supported by subject matter experts, in order to really kind of get these nature-based solutions projects flowing more easily, and de-risking those for the investors that want to come into the space.
Thanks so much, Sarah. I think you pointed the value chain was really interesting. And you're saying that you find yourself doing a lot more on the capital allocation side than you originally thought. I imagine you guys really work in a very nascent market to some degree. It's a market everyone talks a lot about. I know there's also a lot of discussions around like biodiversity credits in Cali. And so it's a market that exists out of either the goodwill of companies paying for their historical damages and or a kind of mandatory, I guess, framework that needs to be negotiated, these policy processes. So how do you, which to me sounds like a lot of uncertainty, a lot of moving factors. how do you navigate that as a startup, or how do you deal with that?
Well, like Megan said, each of these projects is local and everybody's, so that is one of the big challenges, is how can we bring together the data intelligence and domain knowledge in a uniform way to really go from these first of a kind projects, which honestly are a lot of the projects that we're working on right now, to really automate in a intelligent, we call it ecological intelligence, right? To automate ecological intelligence in order for smaller companies to look at these solutions as unique as they always will be, but with enough commonality in the data and the scenario testing that they are still they're still confident in what the impacts will be without needing as much hand holding, to be totally honest.
Yeah, it's a super interesting and such a fast moving space. So yeah, really keen to see how it evolves. And I know it's also a space that lots of academic colleagues have lots of opinions on, for better or worse. But that's part of the fun in the discussion.
Exactly. We can have a separate conversation on ecosystem service credits.
Exactly. We don't need to share this with our attendees. So we're coming towards the end of the webinar, and the 20 minutes I had foreseen has turned into 2 minutes for Q&A. So apologies for my horrible timekeeping, but I hope that the engagements, which I found at least very interesting, helped address some of the questions that may have been there in the audience. And looking at the Q&A, I don't see any questions. So I'm assuming we've addressed the questions that audience members would have had, or they couldn't find the button. But therefore, I will kind of, I guess, take a final, maybe quick question to all of you, maybe particularly for Sarah and Megan. So obviously, we at the Center for Green Finance Investment, as academics, we want to see, we want to see the whole market evolve. We want to see sophisticated financial institutions and users companies doing the right things based on the right data analytics. Gilad mentioned the role of Nature Tech Collective and others to kind of raise awareness, and we need to rapidly raise awareness, and these issues we don't have time to lose, right? So and I think we're seeing increasingly there is awareness about nature tech, about fintech, green fintech, etc. What more can we do? I think either as a community or as kind of supporting stakeholders that are not actively in the market, that you think to take this whole discussion to the next level. What do you think we can do in that support layer to help you guys grow and be successful? Maybe Sarah first, and then Megan, and then also I'll to Gilad and Mike for some final thoughts on this.
Well, I mean, I started in what we used to call conservation agriculture 20-something years ago. Then it became sustainable. Then it became organic. Now it's regenerative, right? And so, so it's kind of have seen this really evolution over the last 20 years. And I have to say the rapid evolution of the nature tech space in the last 18 months is super, I'm very optimistic that trend will continue. I appreciate what everybody's doing here. The Nature Tech Collective is young, but has had a lot of impact, and really enables enabling companies, or all of these companies, to have a platform. So I really think that is continuing to build that platform and be able to really expand upon it. Like Megan said, I love that there are nature directors, or a role within large companies now we have never seen that in the past. So I think really just elevating the conversation and continuing to, attract funders to all of us, all of the startups in the space that are really trying to get a larger foothold and understand how we can serve these companies is the best.
Thank you. Megan,
I have two specific asks from academia in particular. One is around the education, early business leadership and finance leadership, providing them the frameworks and tools to think about how to integrate this. And you can piggyback on what's been learned in climate right? It's not a huge leap. So if you can kind of integrate people's climate journeys, you can integrate nature will eventually take over. But it's a great, easy way to start. The second piece is there's no research showing that companies that manage nature and biodiversity well are more successful. And that's because no one's done that research. So that's another area to like research, you know, this. There's plenty of research around like environmental economics, ecological economics, trying to put price on nature and all this kind of stuff. But there's not a lot of research at the business level perspective looking at, you know, does this constitute good governance in the same way that, you know, gender equity on boards and climate management do? Like, no one's done that research yet. So it's a greenfield academic opportunity.
Thank you, Megan. Gilad and Mike, any final reflections? Mike is at a business school, so he needs to pick up your last question, Megan.
Yeah, I mean, I'll just say that I think there's a really important role that we can play in academia and research centres to help mobilise capital to both nature solutions and also climate solutions, and by identifying what really incentivize investors and lenders and institutional establishments to direct capital in this direction. Because at the moment, you know, apart from maybe in renewable clean tech energy, there aren't very clear signals in terms of the investable returns that can be made. And that doesn't mean that there aren't investable returns, it's just that they're not clear enough in terms of how they can actually be achieved. And this is a big issue, of course, adaptation as well. And I think we in the business school academic environment can actually do research to help identify those opportunities and make sure that that's socialized within industry so that there is more of an understanding of what can be done.
Thanks, Mike. And Gilad?
Yeah, more of an invitation. Nature Tech Collective, we're proud to have Megan and Dunya, Sarah, and Stratifyx as members of ours. This is an invitation to any startups, large enterprises, academic institutions who want to get their hands dirty in building this category. Reach out to me, Gilad at naturetechcollective.org. We have our work cut out for us, and the more the merrier. And on that note, if you're in the UK, specifically in London or the area, March 27th, we're going to have the inaugural Nature Tech Summit, where you're all invited. That one will be very much focused on buyer attendees. We'll talk about the front lines of nature tech and also actual case studies of work being done. And then we're also planning something more academic, technical, or nerdy the day after with one of the academic institutions in London. And you guys have many, so I'll let you guess which one, which will be another half to full day of more of like hands-on workshops, the type that we did at COP16. So I know we're out of time, so I'll leave it there. And thanks for joining this conversation.
Thanks so much, Gilad. Thanks, everyone. And apologies on my behalf of letting this run over, but I've had a really great time. I've learned a lot, and I definitely came away more positive than I woke up this morning, I guess. So thank you so much to all the panelists for your contribution and your time. Thanks to the CGFI team in the background, Alex, Janak, Samia, for making this run smoothly. And we'll share the recording. We'll write up some summary takeaways and contact details, index, etc. with the attendees after. And we hope to stay in touch with all of you. Thank you so much for joining, and see you soon.
Thank you, Christophe.
Thanks,
Bye-bye.
Christophe.
Bye-bye.